Hi everybody. Today we're going to solve the homework problems, the 6 homework problems I asked you to do for Chapter 8. Before we begin what will be our last chapter, we'll only do part of our last chapter. I'd like to say a quick word before we start problem number 3. A student asked me about the definition of normal and necessary. Normal and necessary means any cost that you must or do incur in order to make your product ready for sale, okay? That does not include anything that you did not plan. And here's a good example for you. If you're an antique dealer and you buy a table with a scratch in it, you buy the table, you pay the freight, and you say to yourself, well, I'll fix the scratch before I sell it. Well, you planned on that. The scratch was already there. Its repair cost would be normal and necessary. On the other hand, what if that table did not have a scratch, and while it was being transported, then it was scratched. While you guys were taking it off the truck, it was scratched. That is not normal and necessary. You don't plan on having a scratch happen. So I hope that helps to illustrate, and we'll talk about that in problem number 3. Okay? So problem number 3 is going to be anything, again, that is normal and necessary. You have to buy the unit, you have to get it to you if you're responsible for the freight, and you have to assemble it. All of those are normal and necessary costs, and they're added to the inventory cost. We call that process capitalizing, okay? There's one item that we would not add. So let's take a look at the problem and see what it is, okay? We have inventory for our store. It cost us $37.50. We had to pay taxes. Well, the taxes go along with it. We have to include that. Freight, we have to pay for it. It's $250. We assemble it, and that's $300. Okay, now all of those, friends, are normal and necessary in order to get this thing ready for us to sell. Okay, now what about minor repairs to damage incurred during transit? That is not normal and necessary and would be excluded. The answer, therefore, is going to be, and let's actually write these down for you. This is going to be the price, the purchase price. It's going to be the tax. It's going to be the freight. It's going to be the assembly. Okay, a lot like our bicycle in Chapter 8. And I'm going to take those 4 items just as they've been given to us. Okay, and it looks like the cost was $37.50. Then $175 for taxes, $250 for freight, and $300 for assembly. We are not going to include, okay, I'm going to say over here, exclude repairs. They are not normal, they are not necessary. Okay, and I hope you all see that. Therefore, I'm going to total this up for you, and let's see what the proper answer to this is. Okay, and I'll say this is the total cost. And let me just give myself a little more space in column 1, right? There it is. Okay, if I total up those 4 items, okay, hold on please. For someone who teaches Excel, this is very embarrassing. There we are. The correct answer is going to be $44.75. Therefore, the correct answer is B. Okay? That's problem number 3. $44.75, there it is. Okay. Next we'll do problem 5. Okay, problem 5 says what? What do the terms 210 net 30 mean? Okay, there are all kinds of terms like this. I can sit here and think of about 5 or 6 of them, and depending on how specialized your industry is, you might see something even funkier. But 210 net 30 simply means if you pay, you've got 30 days to pay the full amount, okay? So if you pay it in 10 days or less, you, the buyer, are allowed to chop a 2% discount off the debt that you owe the seller. But if you don't, if you pay it after 10 days, then you pay the full amount, okay? And no matter what happens, the net amount, that's what the N stands for, net, is due in the 30-day terms that that were issued initially, okay? So if you pay in 10 days or less, okay, you take 2% discount. Okay? After that, the full amount is due in 30 days. Even if you pay it in 12 days or 15 days, you still owe the full amount. Okay? Therefore, the correct answer is D. Okay, let's put that on a separate line just so we're not so sloppy here. Answer is D. Okay, there it is right there. A 2% discount can be taken if paid in 10 days or less. Otherwise, the entire amount is due, but no later than 30 days. Okay? All right. Next, we have problem number 6. Problem 6 says, on February 13, we have a sofa company. We buy 3 sofas for $300 each. That is our cost. Notice we're sticking with cost in these problems. Okay, so we bought 3 at $300. So let's write down the purchase price. 3 times 300, which of course is going to be $900. There it is right there. Okay, and read on. Hold on, please. Yes. Okay, read on. The terms of the sale. The terms that the seller issued to us, if we're the sofa company, are $210 net 45. Just like the preceding problem, we know what that means. If we pay in 10 days or less, we're allowed to chop 2% off what we owe, in this case, $900. Okay? After that, up to 45 days, we will owe them the full amount, the full $900. Okay? So we pay the invoice on February 21. When did we buy this jazz? We bought it on February 13th. Okay? We're paying for it on the 21st. Okay? If I did the math properly, that's 8 days, so we're paying it below the 10 days. We are allowed to take the discount. I'm going to write discount allowed. How much is the discount? Well, I'm going to take the $2,700 price multiplied by 0.02, 2%. Okay, it looks like $54. And if that's the case, that means the amount we pay will equal the difference between the two. It's going to equal $2,700 minus $54, or $26.46. What did I do? I wrote down 3 times 300 is $2,700. I made a mistake. Let me fix that. 3 times 300. I put down 3 times 900. That's my mistake. Getting sloppy in my old age. Okay, there we are. Our answer is $882. The correct answer, therefore, is B. My apologies for that fumble of the football right there. Okay, next I asked you to try number 11, I think it was, in the book. Yes, page 310. We are a company called Raceway, all right? Problem 11. Let's read it together. Raceway Corporation manufactures miniature cars, yada, yada, yada. Okay, we placed an order on December 1st. Sales said it won't ship until December 22. We accept that. The supplies actually shipped on December 26 and arrived at our dock on January 2nd. We straddled the end of the year. So we're going to be faced with a question of who is going to own it. Well, let's eliminate a couple of dates here. When an order is placed, there's no transaction there. It's just an intention. We discussed that in a previous chapter. So forget about December 1. The sales staff says it won't be available until December 22nd. Again, who cares? No commitment has been created yet until the stuff ships. Okay, the supplies actually ship on December 26th and they arrive on the 2nd. Now that's where it's between those two dates. It's between answers C and D. So how do you determine who owns it? This little phrase right here, FOB, shipping point. That means that as soon as the seller loaded it onto their truck and shut the door and the truck started to roll, we, Raceway, the buyer, own it. Okay? So title did pass while it was on the truck. So it doesn't matter when it arrives. At the end of the year, we owned it, and that means that as soon as the truck rolled, as soon as they shut the door, loaded the truck, and it started rolling toward our plant, that's the day we own it. That is the day we have to record the supplies in our inventory. It is now ours. The correct answer, therefore, okay, answer is C, because FOB shipping point means that we, the buyer, own it while it's in transit. Okay? Title passes on the 26th. And I'll add that too. Title passes on the 26th. And that, friends, is the day that you should be putting it in your inventory. The next question is number 12. Problem 12. Let's see what we've got. Okay, a company, oh, I love problems like this. We are going to do both a sale and a purchase. We've got one thing that we buy, another thing, a different thing that we sell. A company makes all purchases and sales FOB shipping point, okay? That means whenever we buy something, we own it when it's on the truck, okay? Sales, that means shipping point, whenever we sell something, as soon as it leaves our place while it's on the truck, the customer owns it. Now that's what we normally do, and that's what that first two sentences mean. Okay, now here are two transactions. A purchase, inventory costing $40,000, was shipped to us by the seller on December 28th. We received it on the 4th. Did we own it? Okay, it was FOB shipping point, so we did own it. Okay, think always in terms of our cost now. Secondly, inventory costing $30,000 is sold to a customer for $48,000. We don't care about $48,000. This is strictly a question about cost. Forget about the selling price. We ship it on December 28th. It arrives on the 4th. Okay, now it was FOB shipping point, so that means the customer owned it. All right, as soon as we sold it. So, as soon as the truck rolled, I should say. Now here's the question. If this company had decided to make transactions FOB destination, both transactions, instead of FOB shipping point, how would that decision have impacted the reported amount of inventory on the year-end balance sheet? Both transactions would have been reversed, okay? Right now, we own stuff worth $40,000 that's on a truck coming toward us, and someone else owns inventory heading out on the truck of $30,000. So right now, $40,000 is ours, $30,000 is not. Now, if we reverse the terms to FOB destination, that means that the $40,000 shipped to us by the seller won't be on our books. That still belongs to them when it's on the truck if we make it FOB destination. Sales, the inventory that cost us $30,000. If it's FOB destination, that means we still, FOB, we sold it $30,000. It's shipped on the 28th. If it's FOB destination, that means we own it, okay? So before, we've got $40,000, we don't have $30,000. If we reverse it like they're making us do, we have $30,000, but not the $40,000, okay? So that means that if you're taking $40,000 away and putting $30,000 in, that $30,000 will be in our inventory. Okay, that means that reported inventory will be $10,000 lower. The correct answer is B. I'm not going to waste your time making you watch me type it out. I'm just going to say the answer is B, and then I'm going to explain it on the worksheet before I publish this video, okay? And post the worksheet to my courses. All right, so remember, we're just reversing these two items, right? Okay. Very good. FOB destination. Yes, we own $30,000, we don't own $40,000. So instead of $40,000, we will own $30,000, and that means B, inventory will be $10,000 lower. $40,000 comes out, $30,000 goes in. All right, I want you to study that one for me very carefully, because when I'm speaking it here out loud, it might sound confusing, but when you really analyze what FOB shipping point and FOB destination is all about, it becomes clear. You have an aha moment, as we call it. Okay, the last one I'm going to do with you here is problem number 13. Hold on, that didn't work out well. Let's try that one more time. Problem 13. Okay, here we go. Let's take a look. Again, like the previous problem, I want you to focus on cost. Don't be distracted by anything to do with a sale, okay? We don't care about selling price. We care about cost. We care about sales, but not selling price. We only want to know about how much is added to inventory when we buy it, how much comes out of inventory when we sell it. Having said that, our company, we're called Charlotte Company, we make a 9,000 purchase and we make a sale for 11 grand of inventory. Forget about it. We don't care about selling price. It cost us 6,000. So we're dealing with 9,000 and we're dealing with 6,000. Now, Charlotte did not include either what we bought or what we sold in our year-end inventory. Very good. Our ending inventory was reported as $100,000. I'll call it initial inventory. I don't know why I keep doing that, friends. I'm forgetting which screen I'm in. Okay? Initial inventory is 100 grand. Right? Okay. And I'll just add neither the purchase nor the sale were included in this amount. We have to decide if either of those should be. Okay? So, let's take a look at the details and see what happens. Okay, so we're starting with an unadjusted amount of 100 grand. Now the purchase, let's start with that $9,000 purchase. It was FOB destination. It was shipped on the 29th, straddled the end of the year, and arrived January 3rd. Should it be in our inventory or not? It's not in the 100,000 right now. Should it be? Well, who owns it? All right? The seller sent it to us, FOB destination. That means until we receive it and unload it and sign for it, they own it the entire time it's on the truck. Should it be in our inventory? No, we don't own it. We don't own it until January 3rd, okay? Because it's FOB destination. The terms make all the difference. So I'm going to make a note on our spreadsheet over here. Exclude the 9,000. Okay, and that is the amount that we purchased. So let me add that. The $9,000 purchased. All right, now let's take a look at the second one. What we sold, it was FOB destination, same terms. But this time we're the seller. That means while it's on the truck, who owns it? We do. The seller retains title. It's FOB destination. Title ownership of this inventory won't pass until our customer receives it, unloads it, signs for it. The entire time it's on the truck, it's ours. Therefore, it should be in our inventory. It wasn't. That's what the problem started out telling us. Neither of these transactions were. But it should be. We still own it. So, what we're going to have to do is include the amount sold. And I'm just going to emphasize, make sure you do it at cost, not selling price. I don't care about selling price. All right? And that amount, of course, is 6,000. We still own it. So the answer is, hold on, 106,000. Therefore, the correct answer is C. Okay? Let me just double check that, make sure I got that right and didn't miss anything. Yes, the answer is C. And that, ladies and gentlemen, in a nutshell, are our Chapter 8 problems. A lot of good content here and more than enough for me to write up a final quiz with, okay? So we'll call it a day. Right there, I am going to add a little more detail to problem 12 as promised. I will post this video and then I will post it, I'll follow it, the posting, with this worksheet for your reference and for your study guides. Tomorrow, I'm going to start giving a very brief lecture about some of the aspects, the important aspects of Chapter 9, and that's where we're going to end our semester. Make sure that you get your projects done this week. Don't wait until the weekend, the next weekend, because that's when you should be studying for the final quiz. So you can get that project done, ladies and gentlemen, in less than an hour, maybe even half an hour. It's wicked easy, as I hope my video proved to you. Make sure you refer to that video that I posted to our My Courses page and to YouTube, all right? And in the meantime, as always, make sure you stay safe, and I hope you're all doing well. And best of luck in wrapping up your semester reports for all your professors, as well as preparation for your final. Bye-bye now.